I'm Richard Winch, Executive Director of Startup Virginia. And having spent a lot of my early years in JP Morgan's private banking world, I can tell you this. The way money moves, who controls it, and who has access to it, that's all changing faster than most people realize. This session was recorded live at the Big Dipper Innovation Summit, created by JMI, where leaders in business, culture, and technology come together to explore the ideas and industries shaping what's next. This is the new financial stack, Fintech innovations transforming markets and industries. Sarah Brooks from the Virginia Economic Development Partnership guides this conversation with the builders reshaping finance from the ground up. Corey Harris of Veritas Global Law, who's navigating the legal framework for tomorrow's financial systems. Mike Lepner, CTO at Mission Lane, who's building tech that actually serves underbanked communities. Ryan Cannon, Chief Risk Officer and co-founder at Thrive Capital, who knows what it takes to scale financial innovation responsibly. And Buddha Muth, President and co-founder of Qualify, who's embedding financing where businesses actually need it. What you'll hear is how the plumbing of finance is being rebuilt and why that matters for every business, not just banks.
Great. So our panelists were smart. They sat in the exact order that their photos are up there. So you can see who everyone is and some biographical information in your programs. But maybe we can all get to know each other through the first question a bit. So this is a question for all of the panelists. So we can start with Corey and just work our way down. But what does fintech mean to you? How do you explain it to your friends and your family? And give us some consumer-facing examples that people use every day and might not even know that they're engaging with a fintech tool.
Well, thank you. And to me, fintech means financial services, technology, innovation. One of the things I always give people an example of is if you think about eBay back in the day, when you used PayPal, that was one of the first attempts at basically being able to pay people on the internet. And that's an app that everybody uses. Now you have all sorts of other apps, Stripe and that sort of thing. But the PayPal example, prior to that, back in the day, you were not able to make your purchase online. And so I think they're a critical app in the history of where we are as fintech in basically onboarding the US population.
Awesome.
Yeah, I think to me, fintech really represents the delivery of financial services, products, and platforms through modern technology as well as digital channels. And in terms of companies that I think of from a fintech standpoint, some of the common ones, Robinhood, who has really kind of transformed the way that people invest. And so no longer the traditional brokerages. They've got a digital experience that has expanded massively. Other companies, Venmo, PayPal, Chime is another good example. So companies where you think about legacy companies, particularly in financial services, were bank branches that people would go into to conduct banking transactions. Now, a lot of the newer or neobanks are involved in setting things up and allowing all those transactions to happen via a mobile device or a totally digital experience.
Yeah, and I think that's a great way of thinking about it, Michael. One, everything you touch in finance as a consumer now is technologically based by and large. I certainly still have checkbooks. I also got them in 2012 when I started working at Capital One. It doesn't get used a whole lot anymore. When I think about fintech as a sector, it is a lot of times about removing or competing with legacy infrastructure by simply not having it in place and solving for a lot of traditional trust problems and transactional friction through technology. So the idea there is, although we don't necessarily have the same resources as banks that have been around for many, many years, we have a lot less overhead, and we're able to design things in a way that doesn't create as much maintenance work, ideally. So before I dove into this journey many years ago, I didn't get why you'd bother to go compete with the giant incumbent, because how can you defeat all those resources? But a lot of those resources are curses. It's really, really hard to manage 20,000 people and a lot easier to manage 15. So there are a lot of benefits to it. Ideally, what we're doing is expanding access and then usability, be it for loans, payment transactions, or even just verifying you are who you say you are.
Well, I don't know if I have a lot to add around what fintech is, but I don't think it's complex, right? I would actually argue fintech has been around for maybe over 150 years, when we actually built the ability to transatlantically communicate between Europe and here. We could talk about financial transactions. Just over 50 years ago, the ATM machine came around. That's financial technology. And so really is, how do we make life easier? How do we make the financial transaction easier so that we can spend our time thinking about other things, right? How can we make it so seamless and so embedded that we don't need to be embarrassed about, hey, I need to walk over here to have that conversation? So there's a lot of benefits to fintech, but if it's not making life easier, I wouldn't call it fintech.
Good.
Do you feel like it's fair to say that the intersection of technology and finance has caused a democratization of the industry?
Take that. I think we're in process. That's how I would describe it. If you look at what's going on in not just here but around the world, we're starting to see basically tech companies looking to move further into or down the payment stack from what is traditionally separated as banking only. And a perfect example of that would be just yesterday, you saw DTCC, which is the Depository Trust and Clearing Corporation. They just launched Composer X, which is a collateral management system built on blockchain technology. So what all that jargon means is that today, when you transact, whether it's in the financial markets or buying and selling stock, et cetera, they announced and launched the building of the infrastructure to allow that to be tokenized, to allow it to become basically fully digital. And so I think that's a very interesting kind of a development that we're seeing.
Great.
I think we have a long way to go before we can really talk about democratization. What we have done is enabled a lot more access, typically at the consumer level. So there are way more options out there that you can go pick up with the click of one button. If you want a personal loan, you can go direct to a personal loan provider. You can also go to any number of aggregators. In my business, we facilitate home improvement loans. There are competitors of ours that simply bring together other lenders. So your choice is a lot bigger. On the business side, there's more opportunity to start businesses. It is cheaper and faster than ever to start one of these up, but it isn't cheap and it isn't fast. And the reason for that is twofold, and there are two areas that tend not to move very quickly. One is to play in the banking system. That means you need to interact with the banking system. So I'm going to have a lot of banks to deal with, and banks, for typically legislative reasons, move really slowly because when they make mistakes, it is a big problem. So that means I need to move slower than I'd like to, again, to avoid making these kinds of mistakes and getting sued. And then the secondary issue, as I mentioned, is legislative. There are many laws and many regulations in place for all of us that are engaging in the fintech sector, whether it be payments, loans, crypto, you name it. There's a lot of stuff, and it doesn't really necessarily all give you a book of rules. There's a lot of regulatory bodies, and one might tell you one thing, and one might tell you the opposite thing. So no matter what I do, I'm breaking some regulation. I don't know the answer to that. I will say it is starting to get better, and that knowledge is becoming more commonplace, but it's not the whole way there. I think we need continued progress and more acceptance of some transactional technologies like blockchain. To give a great fun example, I got to take the train up to DC 2 weeks ago to go get what's called a gold medallion stamp. Turned out we didn't even qualify for a gold medallion stamp with the transaction composed. I had to waste 6 hours on the train. It's a pleasant ride, can't complain too much, but I ran into a rule, and then we needed to go find a way around it. And something that certifies that transaction without needing to go find that third party is really valuable. And that's one of the areas where blockchain gets interesting. but we need acceptance of it, right? So that there's a lot more work to do in that space, but things are certainly more available and faster than they've ever been.
I think the availability is incredible, both from a consumer standpoint, like the options that people have to conduct financial transactions and how they go about doing that is fantastic. On the business side, the barriers to entry, when you think about 10, 15 years ago, to start a financial services company of any sort would be a monumental task. You'd have to do so many things yourself. Now, because the walls and the barriers are broken down a lot more, there are other companies you can plug into, so you don't have to solve everything across the board. You can build a certain part of it yourself and then plug into somebody else to provide some of the other services that you have. So that ability to kind of plug and play and create an organization is really just incredible that exists now. You no longer need a data center. Everything's in the cloud. You no longer need to have a bank charter. You can actually partner with somebody else who has a bank charter to conduct transactions. So there's a lot more, I think, a lot more flexibility and benefits to businesses that want to start today. And I think when you start to think about AI and how important that will be, people who start businesses 3 years from now will be in a totally different space. So today we may still be dependent on a lot of manual operations and tasks. 3 years from now, that won't exist nearly as much as it does today.
Yeah, in the last 10 years, the cost to get up and running has dropped by about 90%. So 2 companies ago for me, it was about $15 million to get up and running. With my current company, Thrive Financial, we got up and running for about $1.5 million. And to Michael's point, we didn't really have to build a whole lot. I didn't have to build a loan origination system. I didn't have to build loan management. Didn't have to go get lending licenses. I was able to partner with people to do all of those things. So that expedited our speed to market and reduced my costs drastically. And I'm similarly excited about AI's ability to lower costs further. So imagine we'll dive into that a little later.
So we're hearing that it's the future of fintech, particularly with regulations, is complex and hard to understand. We've also heard from Boomer that fintech is embedded in our daily lives, whether we know it or not. So I think it's important maybe to get a shared vocabulary around fintech. Mike, can you tell us what is the new financial stack? So how do you define infrastructure, APIs, data standards, security, and compliance to everyday folks that might not have a financial services background?
Yeah, I kind of equate it to some layers of a cake. At the kind of top layer, there's the customer experience layer, and that may be having an experience for your customers to engage with you via a mobile app. The next layer down is an API layer, which is really about the integration into both your own services, but potentially into other third parties. As I mentioned before, the ability to plug into some other providers' capabilities or platforms is very important. The next layer down of that is the data, the analytics, and even the AI layer that exists, where as people are engaging with you from an experience standpoint, they're using the APIs, there's data that's being generated, and there's data that you're bringing in from outside, and all that is kind of helping you to operate the business and optimize it. And then at the very kind of base level is the platform level. So whether you're running on a cloud platform or some other type of platform, but just all the different platforms that you have to be able to support that ecosystem from a digital and API standpoint. The one really, really critical area of all that is the API aspect of it all. As we mentioned, even new businesses or business models are emerging, such as embedded finance. So now it's very rare when you go to a retail website and you don't see Affirm or Klarna, which offer buy now, pay later functionality, or you see Apple Pay. And even for us, Mission Lane, we're a mission-driven credit card company for the underserved. We have API integrations to third parties, so we can use companies like Plaid to allow customers to link to their bank accounts. We also are embedded into other partners, so we have digital affiliates that we work with, like a Credit Karma, and if you're a member of Credit Karma, you can log in, and if you're looking for a credit card, you can actually apply for a credit card product through Mission Lane directly on that experience. So no longer are you having to kind of just jump from that site to our site. It can actually be embedded, and so it's a much it's a better frictionless experience for the consumer. It's kind of not changing the way that they would normally engage. And it's opening up the doors for new revenue opportunities for retailers as well as other people who participate in that ecosystem.
Does everyone get it? Can you explain it now? Thank you. That was helpful. So Corey is from Richmond, but he is joining us from a couple of months on the road, based in Thailand. So we were hoping you could tell us what's happening globally in fintech. What are the hot innovations, and what should U.S. founders be looking at on an international scale?
That's a great question. And yeah, it's great to be back, great to be home. So having my sort of global vantage point, one of the things I would say that I've noticed that distinguishes, let's say, the Southeast Asia market, and to level set, what does that mean? So you have 4 or 5 different countries all within 30-minute to 40-minute flight. So if you're a founder in Southeast Asia, let's take Thailand, from the day you launch, you're thinking about Singapore, you're thinking about Malaysia, you're thinking about potentially Tokyo as another major hub. And so what that means from an on-the-ground blocking and tackling perspective is that oftentimes your local founders are looking at go-to-market launch from 3 to 4 different regulatory regime perspectives at the same time. And one of the benefits of that is basically, to the discussions earlier about the complexity and the different rules that are required, you basically have to build your business thinking about all of these sorts of compliance complexities. What tends to happen in that region is that you kind of look to the Singapores and the Thailands, and the reason being that in most countries outside of the US, the central bank is going to be or have a large say in the regulation of financial services technology, so fintech. So a perfect example of that will be a company called Grab, which for an American audience is very similar to Uber, the way you have an app on your phone. The difference that I would say is that Grab is integrated with pretty much everything. It's a mix of, if you think of TaskRabbit here, if you think of calling your Uber, if you think of ordering food, if you think of getting groceries, if you think of having someone go pick something up for you or pick it up in one place and drop it to another, and then also moving money. So what we're seeing outside of the US, and what I predict we're going to see more here in the US, is really a merger of the convenience of these apps. And to your point about the tech stack, the app that you see on the front end, that UX, is going to be your gateway. And then what you're going to see, and what I currently see a lot of founders doing, is on the back end, they're partnering with those various providers that allow the building out of more advanced banking services. And so it's very common in the region, for example, if I'm in Singapore and I'm in a fantasy league, fantasy pro football, et cetera, and I have other friends who are in that league in Thailand or in Tokyo. Well, when you have to put in your kitty to get the league going, you can just pay each other via an international payment network that's set up between those banks. It's very similar to like a Zelle structure here. The difference being it's all QR codes between phones. So it's seamless. And it doesn't matter if you are a street level hawker or a corporate worker. You have the access to the same tech stack. And so I think we're going to see much more of that progress towards like the democratization of it.
Great. There's plenty of progress happening here in Virginia, as evidenced by our panel. Ryan, hoping you can give us some insight into what's happening across the state, what we're building here, where we're headed.
Yeah, I'd say there's a hope, and then there's a lot of activity going on. And I'll point, I was talking about the banks earlier, something I can point to that has been actually a large center is what I call the mothership, and that is Capital One up north. We were talking beforehand, and 4 of us had some type of Capital One connections, with 3 of us being ex-employees. And what Capital One has done is really just bring in an awful lot of people who are very motivated and very bright, given them an opportunity to learn a whole lot. Some people stay there, and some get sort of stifled by the size of the organization, and they decide they want something different. And those tend to be builders that start to create companies. And Capital One's not the only large company in the Richmond area. Obviously, CarMax has a spot right across the street, but having that type of large corporate presence is a nice sort of breeding ground for this type of starting innovation. One of the things that was particularly attractive to me about Richmond, I was living in California until about 3 years ago. There are several. One was those connections, actually knowing that Qualify was here and Mission Lane was here gave me some comfort to go try something that maybe wouldn't work because I knew there were other opportunities in the space. The secondary thing is Richmond is a beautiful, quiet place and extraordinarily affordable. It's a great place to go live and raise a family and also to start a business. Your cost structure is not as high. You're not spending as much on rent. You're not spending as much on employee overhead, and you can deliver better life outcomes for your company and your employees by looking in places in Virginia that are underserved. Northern Virginia is obviously a hotbed. It's also the exact opposite of Richmond in terms of expense and peace of mind. It's a lovely place. I grew up there. But I think there's so many opportunities in the rest of the state that have probably been overlooked. And the fact that we're dealing in a world where I can hook up with you on Zoom and deal with things right now or go on Slack rather than waiting for a meeting or needing to be in person gives us a lot more flexibility on who we hire, where they are, and all those other things. So scaling is really fascinating. One challenge I face, though, is it's also very easy to just be here and hire out of state. And it's a constant battle in between, can I go find somebody near me where we can get some of that face-to-face time more frequently? Or do I just want to grab somebody I know, but they're out in California or in Texas or somewhere else? So you're always kind of making that trade-off when you're thinking about hiring allocations early on, because by function, you're always remote at the beginning these days, I think. At least for me, we started with very little capital, and capital is always a need. So you're trading off quite a lot, but there's a lot of opportunities to grow. And as I mentioned, you can do it faster and cheaper. So I'd love to see a lot more of that in the state.
Great. I work at the Virginia Economic Development Partnership. So my role is to build the ecosystem for the financial services industry here. And so rest assured, we are working on it. And we're seeing some great programs coming out of the universities in Virginia, and really ensuring that Virginians are going to be your top choice for a hire.
Yeah, and you just triggered me there. A little plug that our office is right down the street at the Startup Virginia building. And once I got connected into there was a really fantastic network of entrepreneurs. Whether they're in the same industry or not, you face a lot of the same challenges early. So having those types of resources, Boomer was kind enough to have lunch with me about 18 months ago, probably, as I was trying to figure out what we were getting up to next. So there are a lot of folks I could tap, because you make this jump to go start a company and you think you know what you're doing, but you don't. So finding people that have faced some of those issues before is really valuable, and building those networks really enables us to build more.
Great. So we've talked a lot about technology and some new vocabulary terms, but it really comes down to people. So Boomer and Mike, I'm hoping you can opine on the fintech talent landscape. What skills are in demand if you want to become part of this industry? Any advice for people looking to break into the industry?
Yeah, and I'll let you add on too, Mike. But a beautiful thing that's happening right now with generative AI is we now have access to all the information, right? Through generative AI, you can get your answer very quickly because it's downloaded the entire internet. And so I think what we're seeing now is not having the answers being the skill, but having the right questions being the skill. And so more and more, I think that where you find the most talented people is in the people that are able to connect the dots and say, what else? So of course, if you have data science experience, if you have analytical experience, if you can code, it's important. But more and more, that's going to become obsolete compared to those that can really say, the customer has this problem. I believe we can make it easier for them. And that comes to fintech or anything that you touch in the world. So I would say for anybody here, I've found if you're interested in being a founder, there's a few ways to ensure that you're going to be successful. One, you have the grit. So you're going to persevere. And that's true in the people that we want to hire as well. Are you going to realize there's going to be a challenge, and that challenge is going to make you stronger because we're either winning or we're learning. Two would be, do you have that curiosity? Are you always asking what else? And those are people that really succeed in the fintech startup land. Third would be, are you willing to build those human connections necessary to get the exponential benefit of community? I have not seen a founder succeed that is not willing to sell. This idea of you build it and they will come, that's bullshit. You build it and you find the people whose lives it will change. And the fourth would be make sure you understand your P&L. Now, the great thing is with ChatGPT, it can help you. But if you don't understand your revenue and your expenses and how the money flows, it's going to be really difficult to found that company. Now, that wasn't exactly the question you asked, but I know there's a lot of founders here, and I thought it was important to share that with them. But Mike, other thoughts there?
Yeah, I think you nailed it, Boomer. And I couldn't agree more with a lot of the points that you made. And for us, similarly, like culture, just in terms of grit and really wanting to understand like what's the problem we're trying to solve. And I characterize that almost as a separate capability, like problem solving capability by itself. And I would urge everybody to really think about, like, when you go to join an organization or you create your own organization, think about the culture. Culture is such a key element, and there's the saying that culture eats strategy for breakfast. It's such an important element of success of any organization. So really just a critical piece of it. And, there's oftentimes I run a technology team. And so there's times where I'll come across somebody who looks great from a technical skill standpoint, but doesn't share the same culture. And they want to maybe operate a little bit more like, give me a challenge to go solve for technically. I'll bring it back to you in a week and show you what's done. And that's actually not really what we're looking for, because it's really more about collaboration and recognizing like any individual can be successful, but there's a lot of synergy when you create a team environment where people kind of thrive working with each other and challenge each other, ask the right questions. Technical skills are very important, but we don't look for somebody who's just like a really strong Java programmer or a very strong mobile developer. It's really more, do they have the fundamental kind of knowledge of technology, understanding how it all fits in, knowing how a program is going to interact with compute and storage and memory and databases and things. That's more important rather than, can they crank out Java code? And when you think about technology and where it's going and what generative AI allows, it used to be if you wanted to migrate, a legacy system from COBOL to Java or Java to something else, you needed an army of people to do it. And that got cheaper when you could kind of offshore it. Now it's actually even gotten cheaper and that much easier because generative AI can allow you to convert from one programming language to another. So it's not quite there today, but like in 2 or 3 years from now, I don't really care what programming language people have knowledge of, because they could program something in Python and we might want to convert it to Go for whatever reason, and we can just run it through a generative AI and it'll convert it to Go or whatever other language we want quickly. And so does it really matter having a particular technical skill? Probably not. More fundamentally, do you understand databases? Do you understand how programs fit in, how they can automate things? And it's more important to really ask the question that Boomer mentioned, which is, what are we trying to solve for? What is the challenge? What's the challenge of our customers and our employees? And then how do we build solutions to make that happen? There's no magic playbook that exists. It's like, to start a fintech, do steps 1 through 12 and you'll be successful. Every day is a new challenge that exists, and you have to really be flexible in your thinking. The curiosity is a key thing. A lot of times, with analytics, you can see something happen, and then you really have to kind of keep peeling back each layer with curiosity to figure out like what is going on, why is that happening, and that will lead you down other paths, and hopefully with all those learnings, more and more success. So, to me, it's less about the technical skills and showing that you're really good at this one thing. It's more, do you understand a lot of fundamentals of technology, or if you're in a functional role, more the fundamentals of those, but also just having more of that culture, having the right attitude to go along with it, and the ability to really empower other people to perform at their best too.
I would add one thing to that too. I work with a lot of executives and CEOs in different countries and jurisdictions. One of the things I would say, oftentimes I'm wearing a legal hat and or executive hat. One of the most critical things I've seen teams do that I want to flag here for our potential founders, entrepreneurs, is that know yourself. And what do I mean by that? If you are a technical founder, let's say as an example, and you have an engineering background, computer science background, you have to be self-aware that you're going to have certain skills and experiences that you may need a co-founder that has complementary skills and experiences. If you are primarily sales and marketing or a COO, you're going to need to have someone to complement your skills. And one of the things that I've implemented with other team members is things like ambassador profiles. And what these are is they basically drill down into who you are, how you work as a founder, what you are good at, what you may lack, and then it helps you with that introspection of building out your team. And what I've found that it can do, and I've seen it in practice, is that oftentimes, let's say you're starting a company, you've got a founder and a co-founder, as you move up those levels of growth, there starts to be issues with other founders, issues with operations, issues with team members. And one of the key insights that I've gleaned over the years is when you take a function like ambassador profile, it will start to show, oh, well, when I work with the CEO, who is from a design background or from another type of background, a technical background, or a stronger personality, they need this sort of communication and they need to be handled in this way because this is how they view the world. But when I'm working with my front-end designers, they come at it from a totally different perspective. And I've seen that insight change the dynamics on teams that were previously dysfunctional and could become functional just by being aware of those differences amongst the key players.
Coming up, why embedded finance is eating traditional banking and how regulation is racing to catch up with innovation.
So in an innovative environment, people are fired up and looking to solve problems for everyday people. And in this instance, we're talking about money, which is, whether we like it or not, one of the most important things. Corey, can you talk to us about regulation meeting innovation, particularly for fintech in the US, and how we compare to perhaps the UK or other geographies, and the importance of balancing regulation with innovation?
I think it's very important. So just to kind of level set here, things that are going on in the last 2 weeks, actually in the last 2 days. So Composer X, which is by DTCC, as I mentioned earlier, they've launched an API that allows you to start building financial services technology in all parts of the ecosystem. On the regulatory front, what's going on, if you take outside of the United States, places like the FCA in London, which is the UK, one of their main regulators, actually just about 2 weeks ago, they set up a field office in Washington, D.C. A lot of folks don't know about. That's the first time the United Kingdom has done that outside of the United Kingdom directly. So they are, by action, looking to partner, looking to build cooperation across the pond, so to speak, on the regulatory front. Traditionally, you see central banks outside of the US that are the main regulators for financial services. And that's because, again, the importance of money and that sort of thing. Here in the US, because we have a different legacy system, we have that federal and state overlay. And so what is going on now is, I'm sure folks have heard this, you have the Stable Act, you have the Genius Act, you have different pieces of legislation and you have the OCC, you have all these different governmental agencies that regulate banking and financial services. What they are all doing some version of right now that is beneficial for the folks here is they're all trying to figure out how can we reduce some of the friction that exists as a part of our legacy regulatory structure. And so what they are doing and why I think it's important to pay attention to that is specifically the discussions going on around changing rules for stablecoins. And just to level set the room here, the stablecoin is just another version of a fintech revolution, as we talked about earlier. Historically, the ability to send a bank wire was fintech. Nowadays, we don't look at that so much. But, Circle has just announced they've launched a payments network, which is an API-based end run around the traditional SWIFT system. And they're operating here in the United States. And they're actually open to all fintech partners, so folks in this room, folks that are watching this, to be able to participate in that network. And I think what we're going to see is a maybe lowering of the temperature on some of the regulatory hurdles. And the reason for that is, if we kind of take a step back, if you look 6-7 years ago, when folks were first starting to make rumbles around crypto, people didn't make the connection that this was financial services technology. They just looked at it as kind of an isolated thing. But then over the years, what people have started to realize is, wait, stablecoins is just a modern day version of Visa, MasterCard. The ability to move money on your cell phone, regardless of whether you have a bank account, that's a major innovation in fintech. And that's what we're watching right now. And what different regulators around the world are grappling with is effectively, how do we want to allow or not allow access to this level of innovation? Because it's such a high level of innovation that folks have to think about more macro prudential issues, because when you can allow, for example, tens of thousands or millions of people to move money in and out of countries at a time, regulators want to have a say in that. But what I suspect we're going to see, and what we're starting to already see, is that the regulators globally are going to be talking and communicating to allow this innovation to happen. And that's because they realize that by they benefit actually everyone in all communities. When you allow, a street worker in Southeast Asia to be able to communicate and interact with a taxi driver, and you allow a startup founder in Richmond to then also be able to offer innovative financial services to folks in other jurisdictions, you're actually just increasing the pie from a GDP output perspective. And so I think everyone agrees with that, but the piece that folks are still grappling with is how and where do they set the guardrails. And so in Europe, they're taking a more strict perspective. The US is taking more of a traditional kind of American perspective of free market enterprise. And what I see in the Asian market is they are in more of the US side, but trying to take a wait and see perspective and be accommodating to really everyone else. So I suspect we're going to see within the next 6 to 12 months a drastically different opportunity set for fintech founders, both here in Richmond and internationally.
The challenge with all of this, because I agree with the need to change, is that what fintech as a business model fundamentally is standing next to a large river of money that is flowing, and you're trying to divert a very small fraction of that into your business. Because small percentage times a really big number is still a really big number for you as a person and as a business owner. So it's a great model to get into, but the difficulty is legacy incumbents want to keep their rivulets and they don't want to give it up to you. And the thing with their resources is they have the cash to go invest into political lobbying and making the laws fit their needs. So when Corey's talking about, you can now transact with somebody in Bangkok, basically transaction fee free or much cheaper. That is awesome for you, but it's terrible for the folks that manage that money movement, and they will fight to keep it. So I suspect we will continue to make progress because consumers demand it, but it's going to be slower than we'd like because businesses that are already in the space don't necessarily want it and tend to be reluctant to go invest in technologies that reduce their own margins. Really great businesses will do that, but many businesses will just try to fight for what they have. So I'm all for making life a little bit easier. But I'm always skeptical about the time frame in which change happens because there's many incentives to stay the same.
That's definitely a fair point. I would say as well, I mean, you're 100% right. I think we also are seeing, just to give an example of, I like to give real world practical examples. So when we think about your brokerages today, your Robinhoods, your Schwabs, your Fidelities, well, to your point, the change is incremental and folks may fight tooth and nail. However, if folks haven't noticed, this year, I believe starting from January or late 2024, your brokerages are now open and available to transact. It's about 5 days a week from 4 to 8 or 9 p.m. That is a direct result of the innovation in the digital asset space, where all these exchanges are open 24/7, 365, and the broader financial services space has recognized that the Gen Z millennial cohort, who is very active in this space, wants that ability as a customer to be able to interact with their financial services in more of a real-time, 24-hour way. Yep. And as an interesting aside, you've seen, with the stablecoin piece as well, you've seen Europe go the opposite way under their rules, which are called MiCA. They have actually set the hours of operation that you can make different stablecoin movements and transactions at traditional banking business hours, even though the technology is 24/7. So that's another interesting example of where you see, one jurisdiction taking one approach for one set of reasons, and then different incumbents in that industry, and then other jurisdictions taking a totally different approach, really trying to kind of hold on to the past. So I think you're 100% right.
I want to make sure we have time to take at least one audience question. We have one here. How is the current market dictating change in fintech?
I can start there. We started in the last 2 years, and market conditions have really impacted our ability to execute and thrive. When I started to go raise equity capital in 2022, an awful lot of investors were feeling really burned. In 2020 and 2021, fintech valuations were through the roof and trading at multiples of revenues that frankly don't make sense for payments businesses or lending businesses. So they invested in at the top. They then watched their investments go public with companies like Affirm and Upgrade, and then they dropped by 95%. So if I called a VC and said I was pitching a lending company, they would politely smile at me, listen for about 10 minutes, and then say they'd get back to me. And we had to talk to about 50 of them, and I had to go run down a good $1 million in non-institutional capital before I could really have a serious meeting. And at the same time, interest rates were increasing. So every time you read about the Fed hiking rates or lowering rates, that is impacting how much you pay for your money, because all of us have our capital defined by the federal funds rate. So when it was 0 in 2020, my cost of capital was 5%. When the federal funds rate went up to 5.5%, my cost of capital was 10.5%. And the way lending works is I'm borrowing money to lend to you at a higher rate, and I need to make sure that the amount I lend to you minus my losses is bigger than my cost of capital. So if that goes up, your prices go up, and that's either going to be by you paying a higher interest rate or merchants paying a higher transaction fee. So there's been a large contraction over the last 2 years in availability. What we were comfortable with, though, was knowing we're the only idiots that were just going to go try to fight through that mess. And as rates have started to lower and markets have done really well, even despite the tariffs, we're still near all-time highs, capital availability has opened up. And our hopes there is, because we started at a stupid time, we'll be in a good place over the next 3 to 4 years.
Yeah, you always want to look at market conditions, but when you're looking at building a fintech, it's a reminder that you're looking to solve a problem. Yes, if you're taking credit risk, there's going to be different parts of the credit spectrum affected. If the prime consumer gets hit hard, like in the 2008 recession, then there's going to be more subprime consumers that need access to capital. If there's an inflationary environment, the prime customer doesn't get hit too hard. The subprime consumer does get hit hard. Well, how do you ensure the subprime consumer still gets the items that they need? There's a lot of different intertwining things, but if you stay too focused on what's happening right now, you lose sight of the end. And you have to start with the end in mind. How do we make this simpler? And how we provide access to capital to every consumer? When I think about fintech and lending in general, what you're really doing is you're investing in the future of that consumer. You're saying, I'm willing to lend this money to you because I believe your future self has an income that's going to be able to support this thing that you need. And so all I would say is it's a great question to say what's happening right now, but if every single one of us get too focused on what's happening right now, we're not going to achieve our dreams and make this a better society.
Yeah, it's important to really just kind of factor in, like, where are you going? What's that destination? If you think about it as a road trip, your destination might be going to Florida or wherever, and yet there could be traffic, there could be an accident, there could be a detour. Like, those things are going to happen, and that's another element of particularly being fintech and being an entrepreneur is really kind of knowing you're going to have to be flexible and you're going to have to pivot at certain times. There are going to be things that kind of crop up that are going to be unpredictable, but keeping that destination in mind, like what's the value that you're trying to offer? Who are you trying to serve? What is what's your customer's goal? How do you best support that? Those are the things you have to stay true to, but you've got to be flexible in the short term. And for sure, there's cycles that go on all the time. When you look at lending businesses, cost of capital is a key one. The broader kind of macroeconomic environments, like, is there unemployment? How healthy is the consumer is going to be a big factor. Regulatory kind of environment is also, and all those things go through their own kind of phases. And we're in one now where we've seen, like, when COVID hit, that was kind of unprecedented. Nobody knew exactly how that would kind of play out. But I think the key thing is staying true to, like, what is your overall end goal? What are you trying to do? And recognize that there are going to be a couple bumps along the way, but eventually you'll make it to wherever your road trip is destined for.
And there's always a problem to solve. Everything's always hard. If conditions were easy, my competitors would be doing stupid things, and I'd have to go compete with them. When conditions are hard, there's less competitors. When we're just right, like Goldilocks, I'll find a different set of problems. If you're running a business or you're just working at one, the whole job is solving problems. Nothing ever really gets or stays easy, and if it does, you get bored. So problems are just part of life, and getting good at solving them is a great way to kind of spend your time.
Yeah. So to close us out, maybe on a inspirational note, so innovation makes lives easier. It's fun. It's interesting. But perhaps one of you can give an example of how fintech innovation could actually change someone's life.
I can hit how it changes our consumers' lives. So at Qualify, what we're really focused on is we said the subprime consumer has certain needs they have to get. What's more expensive than not being able to get to work? There's not much, right? So if we can ensure that the subprime consumer has a transparent way to get a set of tires on their car so they can get to work, yes, the cost of financing may be higher, but overall their life is better. The same as far as getting a mattress to get a good night's sleep. So I feel fortunate at Qualify that we get a chance to see why embedded finance at the point of sale, when you need this thing in your life and you can't afford not to have it in your life, having it seamlessly there for you, it's not embarrassing, and it's set up in a transparent way so there's no surprises. I think every day we get to see the feedback that it changes their lives. So not to be a pitch for Qualify, but I do get to see it every day, which is really cool to see that in the technology space.
It's a great time to pitch. And Boomer's been talking a lot about how sort of you have to keep an eye on the end, and the end is where fintech tends to really help people's lives. So at Thrive, we focus on home improvement, and what I really think about that is we're focused on helping families live their family lives better. If you're cold, we can finance your replacement HVAC so you're not cold anymore. So not to be summer, so actually it's going to be AC coming up.
Yeah.
If you're interested in replacing your roof, we can do that. If your windows are old and drafty and you want to get more energy efficient, we can do that. And in the meantime, your home becomes a little bit more valuable. We do a lot of pools financing with the summer coming up, and that is a phenomenal way to spend family time. So it's an ethos I try to keep in mind a lot when I'm stressing out about whatever happened yesterday or 2 minutes ago, is we're actually helping people accomplish their goals for them and their families. So we think that's really powerful, and our hopes over time is we'll continue to allow expansion in that space by financing things like accessory dwelling units. So that can be converting a garage into a living space or a shed, and you can take on a tenant and turn your home into a cash generating machine, or you can allow your family to move in, say your parents that are older. and really far down the way, perhaps even fertility finance. So when we kind of came up with our name of Thrive, there was a goal in mind.
Yep, for us, likewise, we have a number of subprime customers and recognize the same thing. Like for them, life happens, and I think there's a stat that from a couple of years ago that at least 40% of the U.S. population doesn't have more than $400 or $500 saved for an emergency. And so without that kind of fund, they're literally managing their finances on a day-to-day basis. And so having a credit card that kind of can work with them and can help to smooth some of those finances, like when life happens, whether it's a car repair, unexpected healthcare issue, or any other kinds of expenses, like it becomes important to do that. So really understanding like what is it that they're trying to do, what's their kind of job to be done that they're working towards, how do we best serve them? And so we get to see it all the time in terms of the stories of people who are appreciative of how we gave them a chance when other people didn't give them a chance, or how they were used to, being kind of labeled subprime and having a subprime experience, both in terms of fees that were being charged to them or just horrible customer experience. And we try to really look at it and say, how do we build sophistication around like what we do so that we can keep costs low, so that we can charge lower fees and also provide a prime or prime plus experience for them.
And I would round out. So what you've heard from entrepreneurs and builders and how their businesses are helping to use fintech to solve problems in people's lives. So from my perspective as legal counsel for a number of different startups, I'll give a perspective on what I see startups doing. And the beauty of the space is that everyone here is solving a different problem for a slightly different segment of even what is already a slice of a segment. And the benefit that we have here as either a founder, potential founder, or working with founders is if you don't see a service serving the need of a problem that you identify, that is likely the space where you can enter. And so whether you're talking about underserved communities, local communities, international communities, I think the promise of fintech in changing lives is the fact that founders from all walks of life bring different perspectives to solving problems. And that is the secret sauce, because your unique life experience, your unique background, your unique point of view helps you see issues from other angles. And then the real traction on that is, there are millions of people on this planet. There's actually 7.9 billion, roughly. And even if you get a small sliver of that, as we discussed earlier, from the standpoint of building transaction volume or market traction, you have the potential to change millions of lives around the world. So that's how I think about the ability of fintech to change lives.
Great. Well, thank you to our panelists for sharing your insights. And hopefully all of you are fired up to follow their journeys as this environment continues to innovate in fintech. Thank you.
Here's what's really happening. Finance isn't a separate industry anymore. It's becoming infrastructure that powers everything else. The APIs, the compliance rails, the risk models. This invisible architecture determines who gets capital, how fast businesses can move, and whether innovation reaches everyone or just the usual suspects. What these leaders showed us is that building the new financial stack isn't just about technology. It's about access, responsibility, and making sure the future of money actually works for the people who need it most. Be sure to check out other episodes from the Big Dipper Innovation Summit for more insights from the leaders shaping what's next.